Have you ever seen the price bounce off a random line on a chart and wonder how did that happen and why is it going on? Well, quite often that is going to be a moving average that the price is reacting off. So in today's video, I'm going to cover the 50-day moving average, the 200-day moving average, and how they help me with my trading strategy. Let's get right into it. So guys, like I said in the intro, today is all about the moving averages. I'm going to talk about the 50-day and the 200-day and how these help me get entries for longs and for shorts. Remember, a lot of this content I talk about in my Accelerator School, and there is a link in the show description for you guys. And if you like this type of content, you're going to find that Accelerator School is really going to accelerate your trading. Now, let's get into the basics. So the cool thing about moving averages is they are dynamic price levels. They move with the price action, so they are not stagnant like horizontal support and resistance. And the difference between the 50-day MA or moving average and the 200-day is that the 50-day shows shorter time frame trend and the 200-day shows higher time frame trend. Now, you will find that institutions love watching these levels, and it normally becomes a battleground between shorts and longs. And you can often find that a drop onto some of these moving averages can in fact be a launch pad, or a pump into the moving averages can offer a massive rejection. Let me show you a quick example of how to get the 50-day moving average on your chart and how to get trading with it. So the first thing you're going to do is go to indicators. You're going to type in moving averages and you're going to highlight moving average simple, and you're going to click that. Make sure that is added onto your chart. Then it is automatically going to appear in the drop-down menu on the top left-hand side of your trading view. Now what you want to do is click on settings, the settings cog. Then you're going to go to the length, 50. And then what you want to do is make sure it's on day. So click that box, make sure it's the 1 day. You want this to be active on any time frame on your chart. So whether you're trading 1 hour, 8 hour, or 1 week charts, you want to at all times know where the 50-day moving average is. So make sure that setting says day and don't click chart. Make sure it says day, not chart, because if you click on chart and you drop your time frame, it's going to catch a 50 moving average on whatever time frame you are using. So a lot of focus on the 50-day. Once we've done that, you can choose your style, how thick you want it to be, and you can choose the color. I typically like a red 50-day moving average. I'm going to click OK. Okay, so now I've shown you how to get the 50-day moving average on your chart. Let's see how this thing works. Let's look at the true magic of this moving average. Okay, so in this example that I've got in front of me, you can see I've now highlighted the 50-day moving average, and you can see what typically happens with the price action. When it's above the 50-day MA, it generally trends up. And when it's below the 50-day MA, it generally trends to the downside. Now, the cool thing about the 50-day MA and using it in your trading strategy is it adds confluence to certain areas. So if you are using horizontal support and resistance, for example, imagine the power that this can give you if you start adding this as confluence to your horizontal levels. Now, you can see in this example that it has already acted as support on a couple of occasions. Look at that. Support multiple times. When we've dropped into it, it's acted as support, and once it's lost, it tends to act as resistance. Now let's take a look and see how the price action of this uni played out over the last couple of weeks. Constantly in the downtrend below the 50-day MA, and look at that, bang, straight into the 50-day MA and rejecting off that. Now we've broken through. Let's see what happens. Support, look at that. Okay, so the 50-day MA, you can see this is a very short and sweet example for you, but if you were only trading using the 50-day MA, you might have seen a great short opportunity when it pushed into the 50-day MA, and you would have been given a nice long opportunity when it dropped into the 50-day MA. Now, the principle with the 200-day moving average is exactly the same. You're just going to put that one on your chart using the same method that I showed you. Make sure it is set on day and make sure the time is set on 200. And you're going to use that as support and resistance as well. Now, remember the power of these two moving averages, that the institutions love them, and you often get a lot of traders stepping in when you get your price action dropping onto that 200-day or the 50-day moving average. Another cool thing about these moving averages when you use them together is you can start identifying proper trends. So I'm sure you guys have heard the phrases the death cross and the golden cross. Well, that is typically the 50-day and the 200-day MA and them intersecting in different directions. Now, let me show you an example using the two of them, and you're going to pick up some interesting things regarding trends. So let's just look at the uni chart again using the uni daily chart. And I just want to show you this example. When I use the phrase death cross, well, that is when the 50-day moving average starts breaking below the 200-day moving average. And this is often considered a very bearish scenario because that tells us the trend is really shifting. And you can see in this example, we had a cross of the 50-day through the 200-day, and that resulted in quite a lot of downside in the price action. Then we were faced a little bit later on with the golden cross, and the golden cross really is what gets everybody excited. Look at this. We had our 50-day MA crossing through the 200-day in this example, and look at that price action. Look at that acceleration to the upside once that has happened. So a little secret to golden crosses and death crosses, and I suggest you going back in time and just backtest this a little bit, but I have picked up many occasions where as you get a golden cross, which is supposed to be a very bullish signal, the price can often drop into the golden cross. You can often get a dump when that happens because remember, by the time a golden cross has arrived, the market has been trending up for an extended period of time, and there's often a little correction once you get the golden cross. The same thing applies to the death cross. Once you get that official cross of the 50-day MA crossing through the 200-day moving average, you quite often get a pump when that happens, and then you get that rejection off the 50 and the 200-day. Let me show you an example. Now, in this example that we're looking at here on uni, this is on the 13th, 14th of November, and you can see what happened here. We had our 50-day moving average starting to press higher, and we had it crossing over our 200-day MA. But look what happened just before we got that golden cross. The price had already pumped. And once we got the golden cross, or just about got the golden cross, there was a massive sell-off on uni and in the market as a whole. And you can see we had a 26% dump once we got the golden. Okay, guys, so you've got a nice little summary on the 50-day MA, the 200-day MA, and some little tips and tricks regarding the death cross and the golden cross. So if you enjoyed that content, obviously you know where to find me. I'm on Banter Plus Monday to Friday doing all sorts of cool TA stuff and obviously trading tons with the community. I'm looking forward to seeing you guys there as well and can't wait to see you in the accelerator course.